Hello everyone, welcome back to Chill Dill Trades, where I analyze the market so you know what's going on. Today we're going to be talking about the overall market. We've always had a couple red days in a while, and it's been a while since we've had a couple red days in a row. So what does this mean for the market? What's going on in the market? What news has been released lately? And then we're going to look at the charts to figure out technically what we're seeing and maybe where the price is headed over the next couple weeks. But if you're here and you haven't hit the sub button, please hit that. Join the squad. We're on the race to 500, and when we get there, we'll do being a live stream every week together. So help promote the channel. I feel like I put out pretty decent content for you guys, so the more people like it, the more people that sub, the more people that join our community, and it only gets stronger. Let's jump into things. So the first thing I want to talk about is there's been a lot of news out in the market lately, and it's really, I would say, been causing some volatility. Even though the market's been going up, we've seen a lot of volatility in that going up. I would say more than normal. So we've been seeing more volatility but less upside. So breakouts don't break out as much. So what does that mean? It's really because we've had a lot of really interesting news. So over the last month, we've had CPI numbers and PPI numbers continue to go up. On the PPI side, we've seen it accelerate even more. We've seen CPI slow down a little bit, which is Consumer Price Index. If you want to understand a little bit more, my video yesterday breaks that down. Michael Burry versus Kathy Wood. So go watch that. But we've seen it, and so what that's telling us is prices are still headed higher. Obviously, the Fed's saying a different thing, but that's what the data is telling us. And so there's been a lot of fear around that. And then obviously, like about the last week or so, there's been a lot of talks about the Fed tapering sooner than we expected, and even some news about interest rates rising before we expected. And so that's been creating a lot of fear. The Fed had a meeting today. And so what did they say today? So basically what they said exactly what they've been saying for the last months is that we reaffirm that we're seeing price increases as transitory. That's the main thing that they've been saying, and they're continuing to push that perspective. And what they say here is recent price increases and inflationary pressures were transitory and would ultimately pass. This is what they've been saying, and they reaffirm that. And this suggests that the timing of rollback on asset purchases would depend largely on the pace of ongoing recovery in the labor market. So I think that the Fed personally is in limbo, because I personally believe that prices they didn't think that COVID would go on this long. We're seeing all the Delta stuff happen, which is obviously having a big impact on prices. And so I think when we look back 6 months, they're like, okay, COVID's going away, prices are going to come down, but we're continuing to see really big delays in we're seeing big delays in shipments and being able to get products, and prices are increasing. And so what we're seeing US growth decrease, but we're still seeing prices increase. And so what that creates in the economy is a stagflation. And so I think they're like, okay, we're still going to stick to our guns that this is transitory, because we do think that Delta variant, we're solving that problem. And so that's not going to impact how we taper, because we believe prices are transitory still. But they're seeing prices go up, and that's where I think limbo is. And I think that's why you're having some people in the Fed say, we need to taper this month, we need to taper next month. But you have the chairman and other people, and I would say more on the left leaning side, are like, let's not taper yet, maybe towards the end of the year, because we still need to get the labor market where we want it. And so I think that's really what's happening. And I think the people, we're seeing consumer sentiment hit all-time low since COVID. We're seeing prices go up. So the consumer's like, I don't know what to do now. I'm not going to pay this much for a house. I'm not going to pay this much for a car. And so we're kind of in limbo. And I think the market's starting to feel some of that pressure. And I think that's why we have got a little bit of a sell-off the last couple of days. The real question is it going to continue? The Fed has a lot of important things coming up in the next couple weeks. They have a big meeting. And we're gonna. I think that's where they're really gonna probably make a decision, or most likely get closer to a decision. We're already talking about it, but now we're gonna get closer to a decision. And in the next 3 weeks, we're gonna really have a big understanding of that. And early next month, we have the CPI and PPI numbers come out, and that's gonna tell us if we're seeing continuous pressure globally from the Delta variant outbreak. So those are things we really want to pay attention to, but let's look at the charts to figure out if we can see anything that's telling us if we're going to go lower. So the first thing I want to call out is the 20 EMA. So, well, actually, let's take a step back. The first thing I want to call out is I've been making videos last month on the overall market, and I said back in the middle of July, we're seeing large divergence hit the markets. And so what divergence is when something's going up, but something's going down. That's a divergence. And typically when you're speaking technically in the markets, it's when prices are going up or down. But in this case, prices are going up, but our RSI and other indicators are going down. And so we have a divergence. And so typically when you have prices going up, but you have indicators going down, it says prices will eventually catch up to the technical indicators. And that's what I've been talking about lately. That's what I've been talking about in our Discord. If you haven't joined the Discord, go ahead and join that. We've been talking about a lot of good stuff there, and we're growing. We got like 60 or 70 people now, so it's getting more active, and join that awesome community that we are building. But yeah, so we've seen large divergence, and we're starting to see price catch up to it. The real question is, how much will price catch up to this divergence, and how low can it go? So I'd say the main thing is, because of all the divergence that's building up, RSI is pretty low. So the main thing we want to look at is if RSI stays under 50 for a long period of time. I always say this, but whenever we have RSI bouncing above 50, it's a bullish trend or a bullish time period. When we see it bouncing below 50, it's a bearish time frame. Example, we go right here. It didn't last very long, but a couple weeks of downside, we were below 50. And so I think what we're going to want to see in RSI is if we do come back up, fail to break out above 50 and end up turning lower again, we're probably going to see more downside in the market. That's one of the leading indicators that we can keep an eye on headed forward. The next thing I want to call out is that we did break below the 20 EMA, and this is really important because when we look back, the 20 EMA is such an important indicator to know if we're heading up higher or if we have maybe a period of more downside. So just use this example from November through February last year. We just kept bouncing off the 20-day. We had a couple days below, and we'll talk about in a second, but overall just kept bouncing and headed higher. And so that's the main thing I want to see over the next couple days is, was this just a fake out below the 20 EMA and we reverse higher? Or do we actually close below that? See if maybe we come up a little bit tomorrow but head lower again. Was this breakout below 20 EMA legitimate, or was it a fake out? Because when we have fake outs, there's a day of fake out. Guess what? We broke the new highs. There's a day of fake out, 1 day fake out. I'm not saying multiple days fake out, 1 day of fake out. 1 day fake out, guess what that run we went on? That's insane. 1 day fake out, look what happened. Went higher. You can see all the 1 day fake outs. 1 day fake outs are to get people to go in the market one direction and for you to push it the opposite direction. So we really need a confirmation on that. We do see obviously MACD is pretty negative at this point, so it makes me lean towards it's not that, because when we look in the past, when this broke below the 20 EMA, look where RSI was. It was still really positive. When we come back here, it was still really positive zone. But we're seeing MACD show a lot more negativity, which makes me think this is not a 1 day fake out, but we still need confirmation. We have a pretty long-time trend line from back at COVID that I drew, and we are coming up to test that. And when we go to the 50-day, we have the 50-day right below that too. So I'm going to say this next zone is really important to determine, are we just going to have about a 3-ish% pullback, or are we going to go much larger? Because when we look at the 50-day, when we break below the 50-day, it typically leads on the Qs somewhere between a 6, I would say, I think it's a 4 to 6% pullback typically when we break below the 50-day. Yep, 4%, 6%. So 50-day is going to really show how much more downside we have. So 20-day, 50-day is really close from where we are now. Another 4%, let's see, another 4% from the 50-day is down about right here, which is a really important zone. This was my initial pullback when I thought we were going to pull back here and we didn't. And so that's what we're going to look at. If we do break below the 50-day, we typically see a 4 to 6% in the best case scenario. What I'll also be looking at, let's bring up the 100-day. I always like to look at these 3 for more short-term pullbacks. We do have the 100-day just above that. So if we zoom this up, that's about a 3% pullback. And so this is the area I would say if we do break the 50 EMA, we're going to be looking at this zone. Looking more for like resist or support zones. So we're in a really important support zone right here. What we can see is there's a ton of accumulation in the past, so it's going to be really hard to break out. But if we do break below that, we're going to see quite a bit of selling pressure. Probably back to this zone is the most realistic. We'll hit that 50-day, and then we'll probably accelerate into this zone. That's what I'm going to be looking into, say more for the more short term, and especially if we break below that 50-day. So for an example, if the market does break down lower here, you know, we break down here, we hit the 50-day, maybe come back up to that support zone, which is now resistance, and break lower into this zone, we're probably going to want to back test of that 50-day, and that will show us if we're going to head down to more of like a 4% pullback under the 50-day. Because similar to the 20-day, when we break below the 50-day, we don't have as many tests that typically when we break the 50-day, it heads lower. I don't think since COVID we've only had one fake break below the 50-day, and that led up much higher. Every other instance, it broke down much more. So that's what we're going to be looking at for the Qs. When we go to the SPY, very similar to what we've been seeing, I've talked about it in past videos, is divergence. We've had much more dramatic, you know, pullbacks on RSI, but still overall there's been a divergence. And the same thing, don't want to draw right now, and the same thing when it comes to MACD. We've had a divergence basically since back in April. So divergence happening here. Like I said, price needs to pick up to divergence, but how much? So the first thing, similar to the Qs, we do see that SPY broke below the 20-day, 20 EMA. And again, we'll have to see if this is a confirmation or not. We broke below a trend line from back here in last October. That's an important break. So we're going to have to see if we can break back above that trend line and test the 20 EMA and go up. Or if we come back up, back test that trend line, back test the 20 EMA and head lower. So I would say if we do head lower, let's see where the 50-day is first, because we have a pretty big consolidation zone. Okay, the 50-day is right below the consolidation zone. So when we zoom in here, this is a really big consolidation zone, and we do have the 50-day right at the bottom of that. Let's see how the 50-day, so the SPY does not respect the 50-day quite as much, but it's still an important EMA, because when we do see it, we still do see a few percentage points down, but we're going to really want to look for this zone right here. This is going to be really crucial, because if we break through all of this support, because people bought there, so there's a ton of support there, and we have the 50 EMA, that's like a double dose. So when you have multiple indicators being broke down to the downside or upside at the same time, it typically creates a lot of acceleration one way or the other. And so we're going to see if we do, you know, back test here and head lower, this zone is really important. And if we can hold this, then that's probably as much as we'll get on the pullback, which is a 3% pullback, which is not very much. I think we're, if you ask me personally, but this is not technically just my instincts, is I think we have a bigger pullback, but I'm not always right. That's what we would have. But if we break through that range, we'll probably get a pretty severe acceleration down further. And so when we look at the 100-day, we see it back at this support zone. So we have a kind of a support zone here. You know, when we zoom out, it's kind of the, when we had that break in the past to a lot of acceleration back in May, this is kind of that zone right here, which is 429 to 420. And that's where the 100 EMA is. So, or exponential moving average EMA. So those are the kind of the, I would say over the next couple of weeks, those are the decisions the market's going to need to make. Are we, you know, is this a false breakout and we're headed higher or consolidating, both on the SPY and the NASDAQ, or, you know, are we going to see more downside? Now we have some price targets to keep an eye on. But that's all I have for you guys today. I hope you enjoyed that video. I think we covered some really important and technical aspects. And if the market continues to break down, I'll obviously make some more update videos so we're all in line and in tune what's going on. But that's all I have, guys. I'll see you again soon.